Michael Saylor continues his relentless stacking streak. Another potentially big player adopts his MicroStrategy Bitcoin Treasury playbook. And the race to become the first U.S. state to establish a strategic Bitcoin reserve enters the home stretch. We will get into all of that and more on this episode of the Bitcoin Bulletin Podcast.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, morgen, and welcome to episode 209 of the Bitcoin Bulletin Podcast. As usual, I am Chris, and I am coming to you from Florida's absolutely gorgeous Space Coast, and I am feeling bullish AF today. We certainly will talk about all of that and the latest Bitcoin news, but before we do, let's dive into our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 889,589, and Bitcoin is ringing in at a US dollar price of $86,710 per Bitcoin. That means that every fiat dollar that we convert into Satoshis today will score us 1,153 sats. That is just a couple sats more than last week, because despite the fact that Bitcoin's price action had been all over the place in the last 7 days, we're currently sitting about, just under $500 less than last DCA Wednesday. So every time that we're buying a little bit cheaper, that means we're going to score just a few more Satoshis than we would have been able to for every dollar that we convert. Bitcoin's current price gives it a market capitalization of 1.72 trillion US dollars. I know it had popped past the $1.75 trillion mark a little bit when Bitcoin was rallying briefly. But despite the fact that the price of Bitcoin is down week over week, if you go back just the last couple of days, Bitcoin was down as low as $83,000, and we've pumped up to almost $89,000 at one point. But again, it's healthy to zoom out. One of the neat things about doing a weekly podcast is that forces us to zoom out, because we have a whole set of data charted on the weekly basis, as opposed to the minute by minute basis or even the daily basis. For those of you who continue to value your wealth in shiny yellow rocks, one Bitcoin will currently cost you 28.7 ounces of gold. And despite the fact the price of Bitcoin is down slightly from last week, the amount of gold that will take you to purchase Bitcoin is up just a little bit. Last week, 28.4 ounces of gold would have purchased you one whole Bitcoin. And this week, it's going to cost you 28.7 ounces. For those of you who value your wealth in pizza, one Bitcoin will purchase you 4,849 large pepperoni pizzas from Papa John's. That is a pizza every day for more than 13 years. A heck of a lot of pizza for just one Bitcoin. And that metric that has been my favorite the entire history of this podcast, Bitcoin's 24-hour average transaction rate, is absolutely humming, currently averaging 6.14 transactions per second, up significantly from the 5.12 transactions per second last week and the 5 transactions per second the week before, but way higher than the 3.64 transactions per second a month ago. So momentum's building, both on chain and in the loins, as Colorado Hodl likes to say on Twitter. That is one of the reasons I'm bullish. As you know, again, this isn't any TA, it's just an observation that anytime that the average transaction rate is up, used to be that whenever it was above about 3.15 transactions per second, that meant that we were in a bull phase, that Bitcoin was trending up. And, we've seen that number distorted quite a bit with all of the spam on chain, but nonetheless, the metric holds true that when the transaction rate is pumping, the price is usually going up as well, and that still holds. Again, that's just a casual observation, as they say. Correlation doesn't equal causation, but we've been doing this podcast for almost 4 years now, and that metric has been a pretty good way to gauge whether we're in a bull market or a bear market. Speaking of on-chain activity, the mempools are a lot fuller than they were last week. Clark Moody's mempool is showing 24,088 transactions in his mempool, up from just 17,000 transactions last Wednesday. And mempool.space is showing 23,900 transactions in their mempool. That's the second week in a row they've actually had a smaller mempool than Clark Moody. So maybe Matt and Marty, when you're making fun of Clark Moody's quote unquote teeny weeny mempool, it's actually a bit grander, a bit larger, a bit more girth in the mempool than mempool.space's mempool this week. Of course, last week mempool.space had 16,941 transactions in their mempool. So again, that's a fairly sizable increase. Although watching the mempool this weekend, I did see the mempool. I didn't see it actually go to zero, but I saw it with less than 1,000 transactions pending, just a block or so worth of pending transactions over the weekend. So this is relatively new, as the on-chain transactions have ebbed and flowed over the last couple of days. If you are waiting for mempools to clear, it is often on the weekends that I see mempools clear. It makes sense because a lot of the activity online is those traders, day traders and exchanges moving their Bitcoin around, rebalancing, and of course the ETFs rebalancing, buying or selling to rebalance their holdings. Most of that doesn't happen on the weekend. So on the weekend, usually at night, I've seen those mempools get pretty close to clear, even when transactions, even when mempools were chock full, when there was more than 100,000 transactions in the mempool, they got substantially clearer over the weekend. That, of course, is why it's good to run your own node, run your own mempool. You can keep an eye on that, and you can customize or set up your mempool to be configured exactly the way you want it, so you get precisely the data that you want. But if you don't run a mempool, mempool.space has one, and of course Clark Moody's dashboard does as well. And those are two good sources, I think, to get that data. If you do need to send an on-chain transaction, the fees are, well, it depends. Looking at Clark Moody's dashboard, the fees have gone through the roof, up from just 4 sats per VByte for a high priority transaction last week to 26 sats per VByte for a high priority transaction right now. I think that's a little bit of an overreaction to the bump in transaction we've seen, because I mean, just looking at the last block, it included plenty of 1 sat per VByte transactions, and the blocks before that all had at least 2 sat per VByte transactions in it. So I think that might be a bit of an anomaly. But again, if you have a transaction that you need to make right now, make sure you have the most up-to-date information before you overpay. Clark Moody's mempool, or Clark Moody's dashboard, is showing that, for example, if you have all day to wait, they're saying that a fee of just 1 sat per VByte will be mined. And of course, that's the lowest fee they can recommend. Whether you have a day or even perhaps a week to wait, they're still recommending 1 sat per VByte. Mempool.space is saying that a high priority transaction will get mined at a fee of just 4 sats per VByte. Totally makes sense looking at the last several blocks. That's a lot cheaper than 26 sats per VByte and works out to just 49 cents in US dollar terms. And of course, they're saying a medium or low priority transaction should still include a 3 sat per VByte fee, and a no priority transaction, the lowest fee they're recommending you set is a 2 sat per VByte fee. There is oak pollen and palm tree pollen, and I don't even know what type of plant I see all over the neighborhood, raining pollen all over Cocoa Beach today. And my throat's feeling a little bit scratchy. I don't know if you can hear it coming through in the audio. I feel like my voice sounds scratchier and more harsh than usual. Certainly listening to the headphones while I'm recording this podcast. But if that's the case, Florida, it's pollen season year round. Something's always blooming here. And I've lived in Florida for a very long time. And growing up, I never had allergies as a kid. Of course, I wasn't living in Florida, but even when I first moved to Florida, I didn't really have allergies. But in the last couple of years, it seems like it's just been brutal. I'm loaded up on allergy medicine today. And I still feel like that whatever is blooming and punching me straight in the face. But I digress. Since the last Bitcoin Bulletin podcast, the difficulty that it is required to mine a block of Bitcoin was adjusted upward. We saw a 1.4% difficulty adjustment. The Bitcoin Core protocol adjusts how hard it is to mine the next block every 2016 blocks, which works out to about once every 2 weeks, with the goal of having blocks come in at an average of 10 minutes between blocks. Of course, that can be all over the place because mining is quite random. And so sometimes blocks come in back to back. For example, the last 3 blocks have all come in within the last 3 minutes. And other times you see blocks take more than an hour. But in general, if you take the last 2016 blocks and average it out, the idea is that they should come in on average of 10 minutes between blocks. And if they come in a little faster, then the difficulty adjustment is increased to make it harder to mine so that those blocks slow down. And if they're coming in slower, then Bitcoin difficulty is relaxed to try and speed those blocks up. We're currently 1,483 blocks away from the next difficulty adjustment. So that's it's only been a couple days since the last adjustment. That puts us about 10 days away from the next adjustment, which will be around April 5th. Depending where you get your data, it's going to be another increase, and the forecasts are all over the place, anywhere from just 0.78% to as much as 6.3%. Yesterday, I saw one source saying it was going to be almost a 10% difficulty increase, and that is because those first 600 blocks or so have come in on average a lot faster than 10 minutes. In fact, the current average in just in this difficulty epoch is 9 minutes and 26 seconds between blocks. That's significantly faster than the 9 minutes and 52 seconds last DCA Wednesday, even though we had that 1.4% difficulty increase. I have the distinct impression that will slow down. How fast blocks come in is random chance, basically. So we've seen a slew of blocks just screaming in right now, but it's logical to assume that some of those blocks will take longer to come in as well. And that is why I think it's Clark Moody. Clark Moody has Clark Moody's dashboard is the one estimating a 6.3% difficulty increase. And just like they're being overly conservative with their fee estimate, way more expensive than mempool.spaces, for example, they are being way more conservative on how that's going to impact how the block times is going to impact that difficulty adjustment. Whereas the other source I'm looking at, that 0.78% difficulty increase seems like it would be more in line with what we've seen in the last several adjustments. But there's only one way to tell, and that's to wait 1,483 more blocks and see what happens. Of course, all of this only really matters if you're a miner or if you are investing in a mining company, maybe hold some Marathon or Riot stock, because it's going to get slightly less profitable for them as the difficulty increases, unless, of course, the price really rallies, in which case their profitability is going to go up. Again, major tangent. The point being, as a pleb, all that really matters is that we have a boatload of network hash power, a boatload of computing power securing the Bitcoin network. That's been increasing. It's been going up and to the right, just like Bitcoin's price. If you zoom out for the entirety of Bitcoin's history, in fact, it's estimated that there are 801.6 exahash securing the network using a 90-day average. And that is up more than 5 exahash from last Wednesday, when there were only 796.3 exahash securing the network. So certainly not a 6% increase in hash rate, but the trend of up and to the right continues. And it wasn't even a year ago when we were only talking, maybe 550 exahashes securing the network. And even that was the world's strongest computing network, where it's completely inconceivable that anyone would ever amass enough computing power to attack the Bitcoin blockchain, to do a 51% attack, to try and roll back a transaction. And now we're talking 801.6 exahashes, and that is just a mind-boggling amount of computing power. Before we get into the news, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to earn Satoshis for listening to your favorite podcast, but more importantly, it allows you to support your favorite podcast through the value for value method by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout out via a Lightning transaction, where you can send us a message, say hi, let us know what you think, tell us something important that's going on in your life or in your community, or whatever you want to say. But because it is a Lightning transaction, you are sending value back in the form of sats. Of course, when you send us a boost, we do read it on the next episode of the Bitcoin Bulletin Podcast. But even if you are not inclined to boost, if you're holding on tight to those sats, if you feel that you are not receiving any value from this podcast or whatever your reasoning is, you should still be listening via Podcasting 2.0 because you're supporting the free and open source software community and because you could get paid Satoshis. And even though I only received, I think, 20 Satoshis the last time I got paid for listening to a podcast, that reminds me a lot of the old days when there were those Bitcoin faucets where you could get 5 Bitcoin just for going to a website. And that back then that was basically worthless. But look at how much 5 Bitcoin is worth now. And so I envision a day when even if you only get 10, 20 Satoshis for listening to this podcast, one day that might be $10 or $20 or more. Who knows? Either way, you should be listening on Podcasting 2.0 because you're a Bitcoiner. And why would you listen on legacy podcasting apps, just like you no longer get your news from legacy media? All right. Our geographic distribution of listeners is remained the same this week. Last week, we had a slight change with Spain moving down 1 and Australia moving up 1 in the top 10. Currently, our top 10 countries for listenership are as with last week. Number 1 remains the United States of America, with more than half of you listening from right here in the good old US of A. So thank you to my fellow Americans listening, regardless of what state you're in. It does not break it down state by state. It does break it down by territory. So, for example, that 50% doesn't include Puerto Rico. That's for some reason listed as a country by Spotify, even though it's right here in the United States and they're U.S. citizens if you are listening from Puerto Rico. But regardless of where in the United States you're listening from, thank you for listening and being the number 1 country in our top 10. Number 2 remains Singapore, who burst into the top 10 just a few weeks ago, rising all the way to that number 2 spot and hanging on there. So apa kabar, thank you to those of you listening in Singapore. In numbers sufficient to be the 2nd most popular country in our demographics. Number 3 remains Germany. So Dankeschön, mein friends in Deutschland. Number 4 remains Argentina. I could also say Dankeschön because I know several German-speaking people who live in Argentina, but muchas gracias, amigos, to those of you who speak Espanol. Number 5 remains Luxembourg. So Dankeschön, mein friends in Luxembourg, or Morian to those of you who speak Luxembourgish. Number 6 remains Canada, where apparently the frozen white winter has returned, in parts at least. I was listening to the Canadian Bitcoiners podcast the other night, and they were complaining that they had gotten snow. Only one of them said it melted right away, and the other, I guess, had some appreciable accumulation, but certainly nothing that required breaking out the snow shovels and the snowmobiles. Number 7 remains the United Kingdom. So hello and thank you to our cousins across the pond listening in the UK. Number 8, as I mentioned, is Australia. That was a change from last week where they moved up 1 spot to the number 8 position. So hello and thank you to everybody listening down under. And number 9 remains Spain. So hola, muchas gracias, amigos, in España. And number 10 remains Mexico. So once again, muchas gracias, amigos, in Mexico. And thank you to everyone listening. Even if I didn't read your country, I can scroll through the stats and see that we have listeners all over the world, even if it's just 1% or 0.1%. It seems like any country I can think of is in that list. We just read the top 10. Although if you're in Colombia, for example, you're within striking distance of moving back into the top 10. So if you are listening in Colombia and you grab a friend or family member and ask them to listen to this podcast, maybe you'll return to the top 10 by next week. But it is really cool because, Bitcoin is for everyone. So it's a no-brainer that people all over the world would be interested in Bitcoin and interested in listening to me break down the news and interested in maybe learning about dollar cost averaging. And some of those countries that aren't necessarily as wealthy as Germany or the rest of the EU or the United States, maybe it's even more appealing because I talk about buying just fractions of a Bitcoin. But the fact that people are listening right now all over the world, it's both humbling and flattering. I was in a conversation on X the other day with somebody about something that didn't even have anything to do with Bitcoin. And that point in time, they used a combination of words that seemed kind of odd. But in this case, humbling and flattering is a very appropriate way to describe it, because I love talking about Bitcoin. I've been in Bitcoin for many, many years. I've been doing this podcast for almost 4 years, and the only reason it's even worth doing it is because of you, because I know you're listening, and you're not just listening here in Florida. It's not just my friends. It's not just my family. You're listening all over the world. The number 2 country is Singapore. And Singapore is a long ways away. A family member of mine flew there just a couple of months ago with some friends, and we can vouch firsthand just how long of a flight that is, as opposed to just hopping across the pond to London. So I'm babbling a little bit, but it's because I'm really deeply touched that so many of you find your time valuable enough, find this podcast valuable enough to spend some time listening, because depending on what economic system you live under, none of us live under a fully Bitcoin standard yet. And so the most important, the most valuable thing, the thing that we can never replace, that we can never stack more of, is time. So I'm getting a little mushy, but thank you from the bottom of my heart. All right, on to the news. A lot of the news, besides the price of Bitcoin, is revolving around the economy. Depending on whether you're on the left side or the right side of the aisle, people have been trying to talk up or talk down the economy. The mainstream media is certainly trying to pin the state of the economy on the current president of the United States. But if you've been following me on Twitter, you know that I've been mocking the previous administration for referring to this as the best economy in 50 years for the entire history of this podcast. That you remember, we did an episode when they first changed the definition of a recession, because the United States would have entered a recession years ago if they didn't do the mental and intellectual gymnastics to completely change the definition and then to gaslight everybody into the fact that they even made that change. So Yahoo Finance ran the headline yesterday: consumer confidence measure plunges to the lowest in 12 years. The article says Americans continue to sour on the U.S. economic outlook as uncertainty around President Trump's policies and higher prices weigh on consumer sentiment. Okay, there's 2 major things wrong with that. First of all, I'm calling BS on whether Americans continue to sour, because we've been pretty darn sour for the longest time. In fact, that's half the reason we've onboarded so many people into Bitcoin. I think that's the largest reason Wall Street's embracing Bitcoin, because they know the US dollar is garbage. They know the economy is in the tank, that the government is grossly in debt, that they're either going to have to print their way out of it and or inflate their way out of it, which printing their way out of it would do. And that's why people like Michael Saylor refer to their wealth as a melting ice cube when held in dollar terms. So either way, economies don't just slow overnight. Almost every statistic that you get is incredibly lagging. We go over numbers for the previous quarter and what the effect is going to be on the economy, or what the effect is on the economy from policies that are even older than that. Anyway, economies don't just slow to a halt overnight. Now remember, this is coming from the same lamestream media that obediently fell in line when the previous admin made that change. When's the last time you heard anyone even mention the fact that they changed the definition of a recession, or what constitutes a recession? You did, however, hear them tout the best economies in 50 years. Remember, just last Thanksgiving, they said it has never been cheaper to have a big family gathering. And that they tried to say in the history of the United States, when the Pilgrims were having that first Thanksgiving where they went out and shot the turkey and served the corn that they made. No, even that was more expensive than this Thanksgiving, because we had the best economy in 50 years. But besides that, everywhere you look, prices have actually been falling. So the quote unquote higher prices weighing on consumer sentiment is an absolute load of bullshit. For example, one of the things that most consumers use to gauge whether prices are rising or falling is the price of gas. The price of gasoline has not been as low as it currently is since the last time Trump was president. No point in time during the Biden presidency was gas as cheap as it is. And of course, who can forget eggs? Because eggs have been practically a meme. Egg prices have fallen so fast that I saw people on Reddit and on Twitter thinking that this was some sort of conspiracy, that there was an egg conspiracy theory to manipulate the price of eggs downward, no less, to try and buoy favor for the president. Well, the left and the media stooges are going to do everything they can to block Trump's agenda, and that includes an unprecedented propaganda campaign and effort to try and turn people against him. How they're trying to turn people against him is they're going to lie to you. Now, earlier they were lying to you and telling you things like inflation was transitory or inflation was actually good for you. Remember that? Inflation is good for you? Peak clown world, right? Well, now they're saying there's going to be inflation, prices are going to rise, and it's all because Trump is threatening to be mean. He wants to impose tariffs on all these countries. No mention of the fact that all he's doing is leveling the playing field, that countries around the world tariff the snot out of U.S. goods if they don't flat out ban the importation. Maybe the law doesn't specifically say that, you can't import a certain product into a certain country, but then they have a law saying that in order to call a product champagne, for example, it has to be grown in the Champagne region of France. All Trump is doing is leveling the playing field. Half the time he's bluffing, because as soon as he threatens tariffs, these countries we've seen fall in line and start cooperating with the United States. But most importantly, none of these policies have even gone into an effect yet. And if they had, their price will only be measurable in hindsight. We're talking quarters from now, and it's not something that you would have seen in the price of eggs and gasoline, which have ironically trended down. That being said, of course, the price of eggs have plummeted more than 63% in the month, and you can contribute that to Donald Trump. Why can you contribute that to Donald Trump? Because this is something that we have seen in real time. All it took was the Trump Department of Agriculture to stop euthanizing hundreds of millions of chickens. Chickens reproduce relatively quickly. That's why we can count on them for their eggs. And we've seen a new cohort of chickens grow and reach the egg laying stage and not be euthanized. If you want a tangent, look at how they euthanize these chickens. It is horrible. It is absolutely disgusting what they do when they decide that they need to kill all 200 million chickens in one particular chicken farm. I'm not going to get into it. You don't want to even know. There are two methods that they use predominantly. Both are ghastly. And I never saw PETA raise a stink about that when the Biden administration was culling all of the chicken farms because they were worried that we might have a bird flu epidemic. Anyway, long and the short of it is, just by ending that one Biden policy, we have seen the price of eggs drop by 63% this month alone. And again, as I mentioned, it isn't just the eggs. You probably noticed that the gas prices are falling too, despite the fact that heading into summer is usually when you see the most expensive gas prices of the year. Nonetheless, prices have fallen dramatically across the United States, and in many places it is cheaper than any time since 2021. Again, the lamestream media is quick to spin this as having nothing to do with the fact that the anti-oil, anti-energy, anti-drilling administration just got replaced by a president who literally used "drill baby drill" as one of his prominent campaign slogans. No, this isn't Bitcoin related. And tangentially it is, because people are blaming the economy for the price of Bitcoin. And for a lot of normies, fear and FUD about the economy is driving their purchasing decisions. And that does affect us. CNN, who is probably the worst example out there, ran the headline, "Gas prices are coming down, but Trump's drill baby drill promises are not the reason. Gasoline prices are coming down, and President Donald Trump is happy to take credit for that, but he has little to do with it," experts say. Of course, CNN's experts are a bunch of morons. This reminds me of 8 years ago, a little over 8 years ago. Donald Trump had never been president. Obama was president. Donald Trump was running against Hillary. And again, one of his campaign promises was "drill, baby, drill." And Barack Obama came out and he was mocking Trump, saying how stupid Trump was. Trump was never going to be president. You remember that line? But one of the things he said was, you can't just quote unquote wave a magic wand and lower the prices of oil, because, it takes a long time for oil to be discovered, drilled, refined, and have any impact on the economy. So what happened? Donald Trump was elected president and gas prices plummeted from near $5 a gallon to like $1.80 a gallon almost overnight. Because yes, you can just wave a magic wand when it comes to things that are hindering progress, hindering businesses, hindering the economy. The government cannot make you rich. but the government can make you poor. But along those lines, when the government is doing things to hinder business, when the government is doing things to make oil, for example, more expensive, and remember, they were incredibly anti-oil and anti-energy, Hillary promising to put coal miners out of business to their face at rallies, saying things like, well, maybe you should learn to code, telling coal miners, you got to learn to code because we're going to put you out of business. All it took was Obama going away, Trump reversing executive orders, and overnight we saw the price of gas fall. All right, a little bit more on the line with Bitcoin and Bitcoin's price. I think it's funny when I hear Marty Bent refer to the CEO, the founder of Coinbase, Brian Armstrong, as the naked mole rat. And Brian Armstrong has done pretty much everything in his power to avoid using the word Bitcoin at all in any of his tweets until suddenly, when all of a sudden we had the Bitcoin strategic reserve being proposed and he came out in favor of a Bitcoin only strategic reserve. Well, Brian Armstrong was on Squawk Box and he said, Coinbase CEO Brian Armstrong, he said, quote, I think over time we will see Bitcoin get into the millions, multiple millions price target. It's going to be the new gold standard. And that is a fairly common sentiment. I think when you're talking to even boomers, that's one of the ways that you can make Bitcoin more relatable to people that aren't really necessarily tech savvy, that don't understand the code, or you don't even really need to understand the code. All you need to understand is that Bitcoin is electronic gold, that it takes what had been known as the strongest, hardest, most scarce money for thousands of years and then put it on steroids. And so when even Brian Armstrong is saying that Bitcoin will hit $1 million one day, and then it'll even hit a multiple $1 million one day, that's pretty bullish. Speaking of normies, the Bitcoin Fear and Greed Index indicator had been pegged hard on greed. And of course, they say that the time to buy anything is when there's fear, when there's greed, when there's fear, when there's blood in the streets. And we saw that with Bitcoin when Bitcoin dropped as low as $78,000 just days ago, weeks ago. But now we're starting to see that sentiment turn. And according to Bitcoin Fear and Greed Index on Twitter, at Bitcoin Fear, they treated the Bitcoin Fear and Greed Index and now has it listed at 47, which is neutral. I mean, that's pretty darn close to 50. And that is a big change. So the sentiment is turning. When the sentiment starts heading towards greed, that's when we really should expect to see the Bitcoin bull market entering that FOMO phase. When it's pegged on the far end of the greed index, that's when we're in that euphoria phase. And that's when you're really, really going to see that face melting price action. Something I don't expect to happen until, later this summer or maybe early this fall, before we're really, really in the euphoria phase and we finally reach that blow off top for this halving cycle. But the fact that the fear index is now neutral is a good sign that this bull run is getting ready to continue. Again, I've said so many times now, I don't even remember how many, almost every episode, that every halving cycle has between 5 to 7 major pullbacks, greater than 30%, in fact. And this pullback, depending on where you get your data, never even really reached 30%. I mean, we've got like 29.98%, whatever, but still a relatively mild pullback, considering that most of the pullbacks in the previous bull run were in the 38% range. On to some bullish news you probably already know by now, but yesterday GameStop tweeted an announcement regarding Bitcoin, and then a screenshot of their press release of GameStop announces update to its investment policy to add Bitcoin as a treasury reserve asset. Grapevine, Texas, March 25th, 2025. GameStop Corp. and NYSE GME today announced its board has unanimously approved an update to its investment policy to add Bitcoin as a treasury reserve asset. This is something that just seemed like a no-brainer. So many of us were pounding our heads on the table saying, GME, you've got billions of dollars in cash. You're being foolish for leaving that in cash, for not, for maybe thinking about just buying some other company and trying to become profitable that way. Just take that money, put it in Bitcoin. You'll be one of the most profitable, one of the most valuable companies in the world in almost no time, in a blink of an eye, maybe a cycle or two blink of an eye, but in the long game, in the blink of an eye. And so finally, it appears they've done it. Of course, Michael Saylor, hinted that that was going to happen just yesterday, tweeting out a picture of him and GameStop's Ryan Cohen saying, "Welcome to Team Bitcoin," at Ryan Cohen, $GME with a rocket ship emoji. And he'd been made other hints along the way that that was going to happen, just like we got subtle hints from him right before Trump announced the strategic Bitcoin reserve. So bullish that Michael Saylor has orange pilled GME. Of course, the price of GameStop stock absolutely pumped, and this is despite the fact that markets in general closed down fairly big today. I mean, the S&P was down more than 1%, the Dow was down 132 points, NASDAQ was down more than 2%, but GME, GameStop, was up 11.65% today, solely on news that they've adopted a Bitcoin strategy. So what does the mainstream media have to say about this? Well, you go back to our tried and true CNN. We used to call that the Clinton News Network because, you know, even in the 90s, it was known just how hard, it was blatant how hardcore left-wing propaganda CNN was. Of course, we didn't have Twitter. We didn't have really the internet at all. I mean, it was nascent. Of course, the Clinton administration with Al Gore as his vice president took credit for inventing the internet. So if you listen to them, it was brand new in the Clinton administration. But I'm getting off on another tangent. So CNN ran the headline, "GameStop is closing a significant number of stores and will invest heavily in Bitcoin." And the article goes on to talk about GameStop basically closing its stores, like it's having a going out of business sale. It compares it to the fabric and craft store Joann, or to the clothing store Forever 21, or to Kohl's or to Macy's that have been suffering and that they're closing more and more of their stores. But if you make it all the way through the article to the very last 3 paragraphs, in fact, you get to what is important. And of course, they clearly still don't get it. And you can feel their sense of misunderstanding or confoundment in their writing. And so what they say then is, as part of GameStop's pivot away from retail, the company is also getting into Bitcoin as a treasury reserve asset, announcing that, quote, "a portion of our cash or future debt and equity issuances might be invested in the digital currency." The pivot to Bitcoin is really a defense against irrelevance, Neil Saunders, an analyst at Global Data Retail, told CNN, adding that it's an odd thing, as basically it's saying the strategy isn't retail, but to act as some kind of currency investment vehicle. Nevertheless, the crypto announcement helped juice the stock. GameStop stock shares soared 16% in pre-market trading Wednesday. Of course, the article makes no mention of MicroStrategy or the other companies who have successfully deployed this strategy, or why. No quote from Michael Saylor explaining his melting ice cube analogy, or any mention at all of GameStop's $4.76 billion with a B, in cash that they're trying to preserve from being melted away from inflation. But no, this is about driving a desperate last gasp, a grasp to stave off irrelevancy as they sink into the miry swamps of bankruptcy. Is the feeling that you get from the mainstream media, the way they spin it. But as I have mentioned numerous times, you wouldn't expect the legacy media to get it, and that is a good thing, because they are becoming increasingly irrelevant. And the longer it takes for them to get Bitcoin, the more and more irrelevant they're going to get. Because if they did get it, imagine being stuck with them for longer. I mean, imagine CNN or the New York Times with a huge Bitcoin stockpile. I mean, if they had taken some of their ad revenue 10 years ago and invested in Bitcoin, they wouldn't give a rat's patootie about the uproar of the American public, about the fact that they have no viewers at CNN and that no one subscribes to the New York Times anymore, because we know that it's complete propaganda, that it's rubbish. They've become irrelevant, but had they stacked Bitcoin, had they gotten on a Bitcoin standard, they wouldn't be irrelevant in their own little bubble, because they live in a bubble. And if they had a big fat stack of Bitcoin, they would just keep going on fat, dumb, and happy. And because they have put the blinders on to Bitcoin, they continue on their path to bankruptcy and their path to relevancy, as traditional media eats, as Twitter, X and the internet community eats traditional media in the same way that Bitcoin is eating gold. Bitcoin is making the traditional banking system, the fiat banking system, irrelevant. Of course, it isn't just GameStop's huge pile of cash that they're planning on securing with Bitcoin. They are literally following the Michael Saylor playbook. Bitcoin Magazine ran the headline just an hour or two ago saying GameStop announces $1.3 billion fundraising plan to purchase Bitcoin. GameStop announced today that it intends to raise $1.3 billion through a private offering of convertible senior notes. Sound familiar? And will use the net proceeds from this offering for general corporate purposes, including the acquisition of Bitcoin. The move comes a day after the company revealed an update to its investment policy, allowing Bitcoin to be used as a treasury reserve asset. The offering consists of $1.3 billion aggregate principal amount of 0.00% convertible senior notes, also sound familiar, due in 2030. Additionally, the company plans to grant initial purchasers the option to buy up to $200 million more in notes within a 13-day period from the first issuance date. The notes will be generally unsecured obligations and will not bear regular interest or accrete in value. They will mature on April 1st, 2030, unless converted, redeemed, or repurchased earlier. Upon conversion, GameStop will have the option to settle in cash, shares of its Class A common stock, or a combination of both. So fully the Michael Saylor hack in play with GameStop. So not only do they have $4.75 billion in cash that they could convert into Bitcoin, they're going full Michael Saylor, full MSTR, and borrowing money at 0% interest, free money basically, convertible debt issuances, going whole hog to get serious. And that sounds like to me that means they're going to accumulate serious amounts of Bitcoin. I mean, they're not offering stock to try and pay off old creditors or to buy a new company to try and take their business in a different direction. They're going whole hog now because they saw MicroStrategy just completely eclipse its previous business plan, its previous income, and go and become a 100% a Bitcoin company, and their stock price go to the moon as a result. And they want to get in on that action. It sounds like they're going to. Of course, we do call it the Michael Saylor playbook for a reason, because on Monday he announced MicroStrategy had purchased another $5 million worth of Bitcoin. Michael Saylor tweeting on Monday, MicroStrategy has acquired 6,911 Bitcoin for $584.1 million at 84,589 per Bitcoin, already in profit, and has achieved Bitcoin yield of 7.7% year to date 2025. As of 3/23/25, Strategy holds 506,137 Bitcoin acquired for $33.7 billion at 66,608 per Bitcoin. So they now hold more than 500,000 Bitcoin, putting them just, less than 50% away from being in the 21 club, not the 21 million club, the 21 club. They own 1/42nd of all the Bitcoin out there, but clearly on a path to own 1/21 it's just mind-boggling. More money, eventually more Bitcoin than even Satoshi Nakamoto himself holds, and that is pretty amazing. All right, more bullish news. This Bitcoin ETFs, we had seen them have some outflows as the price of Bitcoin tanked, but that trend reversed about a week ago. With the block running the headline yesterday, spot Bitcoin ETFs record 7-day inflow streak with signs of, quote, improving macro conditions. U.S. spot Bitcoin exchange traded funds saw their 7th straight day of net inflows on Monday after weeks of significant outflows throughout February and early March. This is the longest consecutive inflow streak since January 24th. That's a strong signal, said BTC Markets crypto analyst Rachel Lucas. It suggests a shift in sentiment. Now, we saw that in the greed and fear indicator. It suggests a shift in sentiment with institutions backing Bitcoin in a way we haven't seen recently. On Monday, the Bitcoin ETFs reported 84.17 million in total daily net inflows, according to SoSo Value data. Fidelity's FBTC led with 82.4 19.85 million, followed by Bitwise, which saw 19.23 million in net inflows. So that's bullish. And of course, yesterday we saw the ETFs add to that streak, so making it 8 days in a row now with a total net inflow of $26.8 million. So again, bullish. I was thinking it was last episode where we mentioned that a lot of the outflows were not actually people dumping Bitcoin or businesses dumping Bitcoin, but it was people that was hedge funds that had been doing an arbitrage on the ETFs, closing out that arbitrage as it was not profitable anymore. So they were winding down that arbitrage, and that had some effect in that. But certainly bullish that we've now had 8 positive inflow days. Speaking of ETFs, Bloomberg ran the headline 2 days ago. BlackRock debuts Bitcoin exchange traded product in Europe. So that's a big deal. BlackRock ETFs will now be available for purchase in Europe. Previously, they were only, the big American exchange ETFs were only available in the United States. Obviously, there are foreign traded ETFs, but just like any other ETF, whether it's gold or the Spider or the S&P 500 ETFs, the U.S. ETFs are the vast majority of the capital that's traded in terms of ETFs. So making those ETFs available in Europe is a big deal. All right. The bullish news continues to roll right along, with several states inching closer to establishing their own strategic Bitcoin reserves. Arizona, for example, they have 2 potential bills, and they were before the House Rules Committee to determine whether the language of the bills was legal and constitutional and worded properly. And apparently the House Rules Committee has deemed that is the case. And so that means they're going to proceed to a full floor vote. So in Arizona, they're kind of a weird situation, despite the fact that Trump won in Arizona, and despite the fact that Arizona has a majority House and a majority Republican Senate. For some reason, the Democrats control the governorship there, and Katie Hobbs has a history of being incredibly partisan and vetoing absolutely everything that the Republicans put on her desk. So whether or not that proceeds in Arizona remains to be seen. It's going to have basically a pretty strong approval in the House and Senate. If Governor Hobbs vetoes it, so they can override that veto. Whether that's the case or not, who knows? But it's important to know that they're trying in Arizona. Oklahoma has a Bitcoin bill proceeding as well, and it has been recently approved by their House. So that puts them in the handful of states that they've actually advanced legislation, not just proposed it, moving through the House, and now, of course, it would have to go on to their Senate. And Texas, on I guess the 24th, announced that the Texas Senate bill has the Texas Senate bill that would establish an SBR passed by a vote of 25-5, moving it along to the House, making it potentially just one step away. And of course, I think Governor Abbott has either promised to sign that legislation if it arrives on his desk, or at least put out a press release that was very, very, very favorable. And Kentucky, this isn't an SBR, but Kentucky passed legislation which kind of cements the shift in the Overton window. Kentucky Governor Andy Beshear just signed HB 701, known as the Bitcoin Rights Bill, into law. And that's a law that protects the right to self-custody, and it exempts nodes from money transmitter rules, et cetera. So codifying kind of your right to keep and bear Bitcoin, so to speak. So while that's not a strategic Bitcoin reserve bill, it's certainly a bill that's favorable towards Bitcoiners. Of course, Bitcoiners would say Bitcoin doesn't care. Bitcoin doesn't need a law guaranteeing our rights to do so, but it's certainly nice to have an administration, a legal framework that is positive as opposed to one that's attacking you. Much more of a then you win environment than they fight you environment when states are passing laws saying you have the right to hold Bitcoin. Of course, it isn't just the United States making these big strides in Bitcoin adoption. On Thursday, we found out that Pakistan had moved to legalize cryptocurrency, and that I don't speak French, so I apologize if I butchered this, but I'm not even going to say it. But in France, They have Toulouse, France. There's an airport there. I should know the name of the city. I don't speak French. I'm sorry. It's one of the languages I have a really hard time with. But they became the first city in France to accept Bitcoin for subway payments. So even with the EU moving generally anti-Bitcoin towards their EU-wide CBDC, for example, on the ground, grassroots efforts, you have cities, for example, getting on the Bitcoin standard. Before we get on to our DCA Wednesday stack, this is an interesting story, and I'm going to file this under the time wounds all heals category. Yesterday, Ben Armstrong, you might know him as BitBoy, not the BitBoy who designed the Bitcoin logo, but the more recent BitBoy, who has been very controversial to say the least, was arrested in Volusia County, Florida. And Volusia County is Daytona. Basically, it's along the coast between where I am and between St. Johns County, where like St. Augustine is. You have Volusia County, predominantly Daytona. And Daytona, other than having the Daytona 500 and Bike Week, which were a lot of fun, it is kind of, it's a shithole. It's ghetto. It's a wall of condos along the beach, and then a bunch of people stabbing you, shooting you, smoking weed. If you like smoking weed, that's fine. But if you're just blazing away while a family next to you is trying to enjoy dinner at a beachside restaurant, the scene I don't go to Daytona except for maybe for the 500. I mean, I used to go there, and it's just gotten dangerous, and it's dirty, and it's very much turning into like the LA or the San Francisco of Florida, and not any of the good things about LA or San Francisco. But Ben Armstrong was arrested, and he was arrested on an FOJ warrant, a fugitive of justice warrant, which means he's wanted in another state. You can probably figure out where and why, on a felony charge, because you can't extradite across state lines for misdemeanors. So he's a fugitive of justice, and that means he is being held in Florida without bond pending extradition. And it also means he's pissed off a judge enough that when he does get back home and has to see that judge that he fled to avoid facing charges from, it means he's probably going to face some serious time, at least time. A judge does not cut you any slack when you fail to appear, and when you bail, you go to another state to try and avoid going to trial. So for those of you who don't like Ben Armstrong, maybe there's some schadenfreude there, but I guess you see what happens to shitcoiners, right? They trend to zero, and Ben Armstrong's trending to zero fast. All right, back to the positive news, back to what makes today so special, what makes today and every Wednesday special, and that is Wednesday is DCA Wednesday. And what is DCA, you might ask, if you're just joining us, for example? Well, DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. Instead of trying to time the markets, instead of trying to gamble in the markets, they say time in the markets beats timing the markets, and this is an example of how you do that. For example, we set our equal portion to just $20 because I wanted to choose an amount where, regardless of where you are, regardless of what your station in life is, almost everybody listening to this podcast can come up with $20. If you're Michael Saylor, or if you're a high roller, a doctor, lawyer, whatever, and $20 is nothing to you, then of course you would choose an amount that's more. But that's a you do you thing. We set it at $20 for two reasons, because we think that most of the people listening to this podcast can reasonably come up with $20 a week to save for the future. And I wanted to show that even if you can only come up with $20, that over time, that would build a significant reserve of Bitcoin. And indeed, I think we've shown that already. And then, of course, we chose weekly as our regular interval. Again, a you do you thing. There are people out there that DCA daily. Some people DCA hourly. But normally when people DCA into their retirement plan or their investment portfolio, they DCA on payday when they get paid. So most people that I know get paid bi-weekly. So maybe you DCA every other week. But we chose weekly because it worked out really nicely, especially for a podcast format. So our DCA, our regular interval is Wednesday, and our equal portion is just $20. And we've been doing that since July of 2021. And this is going to be our 192nd Wednesday. So far, we've stacked 190 Wednesdays, converting at just $20 a time, $20 a fiat, totaling 3,820 now into a stack of 10,501,505 sats. So a little more than 0.1 Bitcoin. And, that at $86,000, 0.1 Bitcoin is 8,600 US dollars. And so if you're in the camp like me, where that's a lot of money, and you're thinking, I'm too late, is it even worth my time? Well, I've shown that at just $20 a week, granted it took 4 years, but over time, just $20 a week turned into a pretty sizable stack. And perhaps more importantly, our average purchase price, because we bought over time instead of trying to time the markets, is just $36,375.76. So significantly less than half of what that stack is worth. So not too shabby. Today, as usual on Wednesdays, we're going to grow that stack, and we're going to grow that stack. I'm going to grow that stack by using the Cash App. Cash App is not a sponsor of the show, and that is another you do you thing. Cash App might not even be available where you're at, but I find Cash App the easiest, simplest way to stack small amounts of Bitcoin. They do charge a higher fee than, say, Gemini or Cash App does, or Gemini or Coinbase does, for example. But that's only going to work out to about 45 cents when we're stacking only $20. And the difference between that 45 cents and what you might pay to Coinbase, I think, is negated by the fact that Cash App is going to let us transfer that Bitcoin to our hardware wallet without charging a mining fee. And the last time I purchased on Coinbase, I paid a $5 mining fee to transfer my Bitcoin. So you can see why I think that 45 cents is going to come out in the wash, so to speak. Again, that's a you do you thing. If you decide that you want to use Cash App and you don't already, there is a referral link in the show notes. And if you click on that referral link when you sign up, you'll get a little bit of something for free for signing up, and the podcast will as well. It'd be silly not to use a referral link when you sign up for a product, because you're giving up something for free that you wouldn't normally get if you're going to sign up for the service anyway. But again, they're not a sponsor of the podcast. All right, so I have Cash App open. I already have $20 in Cash App, so it is a matter of just tapping Bitcoin. But if I didn't have any money in Cash App, one of the other reasons I love Cash App is they allow me to transfer money in instantly. So I have a debit card linked to Cash App. It would have been a matter of just trailing it to transfer $20 to Cash App. That money would be there instantly. They would let me buy Bitcoin instantly and let me withdraw the Bitcoin instantly as well. Things that most other services don't. For example, last time I purchased on Coinbase, they let me buy right away, but then they locked up that Bitcoin. They wouldn't let me transfer it for 5 to 10 business days, which worked out to 7 days before I was able to transfer it, because they want to make sure that cash is going to settle. So there's trade-offs. Again, that's a you do thing. But I'm getting sidetracked. I have Cash App open. I've already tapped on Bitcoin, so it's only a matter of tapping buy. I have to manually enter $20 this time. About every other time, I can just tap 20. This time my options are 10, 25, 50, 100, 500. So entered $20, tap buy, tap and confirm, and boom, just like that, we've stacked another 22,578 sats. Bitcoin went down just a little bit while I've been talking, so we purchased at a price of 86,589 US dollars. Those 22,000 sats, which makes me happy, because remember just a couple weeks ago when we were only getting 18,000 sats for that same $20, that's going to happen again when Bitcoin breaks $100,000. But right now, we got 22,578 sats for 20 US dollars, and that raises our stack total to 10,524,078 Satoshis, currently worth $9,112.66. And we've now converted 3,440 US dollars, just $20 at a time. If we were to be in it for the fiat money, that is a 2.6x gain, 264% gain on an investment of just $3,440. And of course, we're not planning on selling that Bitcoin ever. Like President Trump said at the Bitcoin conference in Nashville, you never sell your Bitcoin. But, if you're planning on selling your Bitcoin, you should you should be planning to at least hold it for one full cycle, if not 10 years, more than 2 cycles, because, you've seen what Bitcoin can do over time. Purchasing at the price of $86,589 did increase our average cost basis by another $112. So our average purchase price is now $36,487.76, still significantly less than half the current fiat value of that stack. But perhaps more importantly, for those of you who are eyeballing maybe having some generational wealth one day, or at least having a safety net, a savings account that you could fall back on if the world goes to hell, or if something major happens in your family, when Bitcoin retakes that $100,000 per Bitcoin mark, which it's going to do eventually, probably sooner rather than later. But when it does, that stack will, of course, have a US dollar fiat equivalent value of $10,524.07. When Bitcoin hits 1 million US dollars, whether it does that this cycle or next cycle or whenever, that stack without adding another Satoshi will be worth $105,240.78. If you think that Bitcoin is going to become digital gold one day, if it's just going to be one of the largest major assets that people store their money in, that countries like the United States back their currency in one day, Bitcoin's certainly going to go a lot higher than 1 million. But even if it just ties gold, it has to hit 1 million to do that. So the fact that it may hit that $1 million mark sooner rather than later, Samson Mao thinks it's going to hit this cycle. Others think it's only going to hit maybe 200,000 this cycle. I wouldn't be surprised to see 250,000 this cycle, and then after the 2028 halving, maybe in 2029, we break 1 million for the first time. But all I do know is that it will happen eventually. Adam Back has a prediction for $10 million Bitcoin in the near future. If that happens, even if it takes 5, 10, 15 years, our stack would have a value of $1,052,407.80. Certainly a heck of a lot more significant to your family than the $3,800 that we've converted, $3,840 that we've converted thus far. Now, remember, back in 2022, Fidelity Digital Investments Director of Global Macro, Jurian Timmer, said that he predicts that one Bitcoin will be worth as much as 1 billion with a B dollars by the year 2038. So just a little over a decade from now, if you're holding your Bitcoin, this stack without adding one more Satoshi would be worth $105,240,780 US dollars. And that would be generational wealth for pretty much anyone, regardless of where you listen to this podcast. Either way, not too shabby, considering we've converted now just 3,840 US dollars, and we did so by stacking just 20 US dollars a week. All right. As usual, before I wrap up, I would like to ask you to share this episode with a friend or family member. Depending where you're at, that might boost your country in the top 10 rankings. You can also help spread the word by simply rating or reviewing this episode, as of course that feeds the algorithm monster and makes it much more likely that when someone's looking for a podcast to listen to, that this one will pop up in their search. You can also help feed that algorithm monster by making sure you're following us on Twitter. On Twitter, we were at BTC Bulletin Pod. That's on Twitter, or X now, at BTC Bulletin Pod. Of course, I love hearing from you. So if you do follow us on X, my DMs are open. I have my DMs open right now. I do respond to DMs unless they're, the pretty Asian girl saying, "How's your trading going?" If you don't use Twitter and you want to reach out and say hi, you can always send me a good old-fashioned email. I also have my email open, and my email is bitcoinbulletin@protonmail.com. Again, bitcoinbulletin@protonmail.com. Of course, don't forget to join us next Wednesday as we continue our Bitcoin journey. But until that time, don't forget to keep on stacking those sats, you sexy sat stackers.